Hello everyone and welcome back to the channel. In my today's video, I'm going to discuss to you about Tata Capital Limited. We'll go through their recent result, understand their business model, how well they are doing, and whether they can continue doing better in the coming quarters and coming years. Right. So let's just look into this. So Tata Capital belongs to Tata Group and it's an NBFC and they have three further subsidiaries. First is Tata Capital Housing Finance Limited, which is engaged in housing finance. Second is Tata Securities Limited. They are mainly engaged in distribution of mutual fund and other financial product. And the third is Tata Capital PT Limited, which is based out of Singapore. So they operate fund management services. And if you look at their overall business, which is lending, right? So they have other non-lending businesses, which I've already said. One is private equity, second is wealth management, and third is distribution of insurance and credit cards. So if you look at their overall product offerings, right, and their overall segment, so retail contributes to around 58.3%, SME contributes to around 27.4%, and the corporate book is around 14.3%. And if you look at their other part of their retail, right? So they have loan against property, they have home loans, personal loan, business loans. So they are literally distributed everywhere. And the other thing, what they are trying to do, right? They are trying to get into the unsecured part of the business, which is also quite important, right? Because unsecured part of lending, right? They earn actually more interest at the back of it. And if you look at their recent result, right, the revenue was up only by 9%. To around 8,160 crores from 7,748 crores, but the PAT was up by almost 43% to 1,466 crores, and EPS jumped by almost 28% to around 3.54 rupees. And the other important thing when we look at the overall business, right? So the retail disbursement is increasing overall, whether it is personal loan, whether it is business loan, whether it is microfinance loan. They have clearly said that the personal loan slippages, right, where people are not paying, has come down by 60% from Q1 FY26. For business loan, it has come down by 34%. And for microfinance loan, which has come down by 70%. And if you look at these things, so that means the overall, how to say, credit cycle is improving, people are paying back, and the disbursements are also increasing, right? So let's look at the overall asset management growth and how well they did, right? So if you look at their overall asset management excluding the motor finance business, the reason I'm telling this is, right, because this motor finance business, it recently got merged with Tata Capital, but before that it was Tata Capital was completely individual. So we'll look at their overall number excluding the motor finance, right, at this point of time, because that is much more better comparable. And I think including the the motor finance book, we can look from the next coming years, which will be much more better to compare. So their asset management under management grew by almost 28% YOY. Their cost to income came down from around 37.8% to 36.1. And if you look at their overall PAT grew by almost 51.4%. And one of the important thing in lending businesses is the asset quality, right? See, no matter how much loan a company gives, right, if the loans do not come back to the company, they are doomed. And that's why asset quality is one of the most important things. So let's look at their asset quality for Tata Capital, right? So if you look at their GNPA, it has come down from 1.6% to 1. Come down, from 1.6% to 1.5%. Their net NPA has come down from 0.6% to 0.5%, and which is quite a great sign. At the same time, their ROE is also increasing. If you look at their return on asset, from 2.1% has gone up to around 2.5%, and ROE has gone up from 14.2% to 4.6%. And they're actually quite doing well. And the other advantage, which I believe Tata Capital has, right, it's the backing of Tata Group, right? Because see, for every any NBFC, right, they have, the more that they lend, the more at the back of it they can earn money, right? But for lending, right, they have to raise money, and they have to raise money from outside, obviously, for which they have to pay certain amount of interest, and then they take that money and lend it to someone else at a higher rate of interest, and the gap is there, the margin or the interest that they earn. But for Tata Capital, having the backing of Tata Group is very important because they can raise money from Tatas at a much lower rate compared to other NBFC. And I think the same benefit, if you look at Bajaj Finance, they also had the same benefit because having the backing of the Bajaj Group. So I think that is going to be very beneficial. And overall, if you look, right, if you look at any microfinance business, right, the cycle is improving. Whatever the credit cycle was going through difficult times in the last 2 years has continued to improve. And if Tata Capital is able to, improve their asset under management, grow by, even by 25%, it would be quite good sign. And if we look, I mean, if I compare to Tata Capital to Bajaj Finance, which has obviously the growth has slowed down in the past couple of quarters and years, right? The price to book is still around only three for Tata Capital, which I believe that being such a good company, they still have some path to grow. So let's see how well they perform, because only if they perform that the stock is going to reward to the investors. So I'll definitely keep an eye on this, and I'll definitely keep you guys posted on the results when they come in Q1 and in the coming quarters. And if you like this video, please do subscribe to my channel. Thank you and God bless you.